Welcome back. In our top business story, investors across the UAE are counting the hours for index compiler MSCI to announce its decision on whether it has upgraded the Emirates stock market to emerging market status. The MSCI will release the results of its annual market classification review for both the UAE and also Qatar tomorrow, December 14th. The announcement will be posted shortly after 2 a.m. local time on the MSCI's website, the company said in a press release. In June, citing limited availability of shares to foreign investors, the MSCI had delayed its reclassification decision to be able to receive further feedback from market participants on whether the UAE has put the fundamentals in place for an upgrade. Not only an increase in foreign ownership caps from currently 49%, but also the proper functioning of the UAE's delivery versus payment system. We earlier asked Joe Kaukabani from Franklin Templeton Investments, he's the Chief Investment Officer of the company's MENA Equity Asset Management Division, how likely an upgrade of the UAE market is and what that would mean for the Emirates stock market.
Well, we think that there's a high likelihood that the UAE will be upgraded this time. If you remember, in June, the MSCI, when they did the review of the UAE, they had mentioned two issues, one of which was the DVP, and that's the more critical issue, and the other one was the foreign ownership limits. On the DVP now, the MSCI has had almost 6 months to actually look into it, and we haven't heard of any hiccups in the system. Regarding the foreign ownership limits, we've seen slight improvement with FGB increasing its foreign ownership limits. So overall, we think that there's a high chance UAE will be in based on better foreign ownership limits and better DVP in place. Now, what would that mean? The impact will be mildly positive. I'm saying mildly because even if the UAE makes it, its potential weight in the MSCI emerging market will be small, around 20 or 30 basis points, which will limit, if you want, the inflows in the short term. However, over the long term, this will be extremely positive as it will put the country on the radar screens of a lot of large institutional funds.
The UAE's second largest lender, Abu Dhabi Islamic Bank, has announced that it has paid off an $800 million 5-year sukuk. The Islamic bond was issued in 2006 and was part of a $5 billion trust certificate program. Shares in Abu Dhabi Islamic Bank were unchanged today. Here's a quick overview of the UAE and GCC markets. Investors are again facing uncertainty after rating agency Moody's said it would review its ratings of all EU member states, while rival Fitch said the summit had failed to provide a comprehensive solution to the debt crisis. We have Tim Fox, Chief Economist at Emirates MBD, here with us to talk about the issue. Welcome, Tim.
Thank you.
Good to have you here. Why is it so important that Germany and France, countries that have a AAA rating, keep that rating? Why is it so significant in case they would be downgraded?
Well, I think the markets have got used to the idea that there could be a downgrade for both Germany and France in the context of the European sovereign debt crisis. I think it would largely corroborate what we already know, essentially, which is that very few countries are entirely risk-free. We saw that in the summer of this year with the US being downgraded from AAA. And a few years ago, Japan lost its rating as well. So I don't think it would be entirely a surprise. I think it would probably lend itself to raising the borrowing costs for those countries, but it would also raise questions really about the viability still of the Eurozone project, and would further add pressure to the governments of Europe to come up with a comprehensive solution.
Let's look at the US. The Federal Reserve will meet today, have its FOMC meeting tonight. The market is sort of discussing whether there will be a third round of quantitative easing. Do you think that's likely, and what would that mean for the markets?
Well, I think if they are going to reintroduce quantitative easing and for a third time, it's more likely to be next year rather than at this meeting in December. The data that we've been seeing in recent weeks has been quite encouraging from the United States. But there is always the chance as we go into 2012, if we see some sluggishness in terms of employment again, then you could see the situation arise whereby the US may discuss further stimulus measures, including quantitative easing.